Good morning, hunters. Welcome back to the Daily Hunt for Multibaggers on this Tuesday, December 2nd, 2025. We've got a packed show for you, diving into all the market buzz from yesterday, December 1st.
That's right, Ethan. Our AI systems flagged a significant increase in social media discussions, with quite a few different stocks popping up on the radar. It really felt like a mixed bag out there, with some clear bullish sentiment alongside some very cautious and even bearish signals.
Definitely a day where you need to separate the signal from the noise, But that's what we're here for. Let's get right into it.
First up, let's talk about Rigetti Computing Inc., RGTI. This one has seen a spike in activity, but our analysis is pointing to a very bearish overall sentiment, Ethan.
Well, quantum computing is definitely an exciting frontier, Brooke, and the sheer volume of posts might suggest growing interest in the sector. Sometimes these early-stage tech companies face skepticism before they really hit their stride.
That's true, in theory, but our KPIs are screaming caution. Negative revenue growth, substantial cash burn, and a whopping minus 13.13% in net insider selling over the last 6 months, including the CEO liquidating all his shares at $12. The market cap, nearly $8 billion, is just completely detached from their $5.2 million in 9-month revenue. It's a textbook case of overvaluation based on future hope rather than current fundamentals.
Okay, I hear you on those numbers. Insider selling is always a tough pill to swallow. And the community sentiment did seem overwhelmingly negative, calling it a scam or trash. It's hard to be optimistic when the people closest to the company are heading for the exits.
Exactly. RGTI has consistently been rated stay away in our past discussions, and based on this data, we're definitely keeping it in that category. The P/B ratio of 20.5 is just astronomical for a company with such deep unprofitability.
Agreed. For Rigetti Computing, RGTI, the verdict is a clear stay away. Too many red flags right now. All right, moving on to something with a bit more zest. MongoDB Inc., MDB, saw a lot of chatter around its recent Q3 earnings call, and it sounds like good news, Brooke.
It certainly does, Ethan. The latest news is predominantly positive, with MDB's earnings and revenue surpassing estimates and the company raising its annual guidance. The stock jumped significantly in after-hours trading, indicating strong investor confidence. This is a clear buy signal for me.
See, this is what I love to see. Strong earnings beats and raised guidance are powerful catalysts for growth stocks. We're talking about a company with 23.7% revenue growth, showing it's really expanding its top line, which is exactly what you want from a tech leader.
While that growth is fantastic and the news about adjusted net income rising is promising, we can't ignore the gap profitability. Their net profit margin is still negative at minus 0.03 and EPS is minus 0.82. The P/B is also high at 9.1. We also saw some net insider selling, a minus 3.24%, which is a minor caution.
Those are fair points, Brooke, but for a high-growth tech company, sometimes unprofitability is part of the journey as they reinvest in expansion. The market clearly sees the potential, and the strong revenue growth, coupled with that positive market reaction and guidance hike, suggests these profitability KPIs could turn positive down the line. It's never been rated by us before, so this is a fresh look.
And a positive one. The potential for these strong news items to improve future profitability KPIs is significant. For MongoDB MDB, our verdict is a buy. Next up, Nvidia Corporation, NVDA. This one definitely caused a stir, with one user posting a very bearish take, but the community's reaction was overwhelmingly bullish.
And for good reason. Despite that one bearish post, the overall sentiment for NVDA is incredibly positive. Users are highlighting its enormous moat with its integrated hardware-software ecosystem, strong demand, and its indispensable role in AI. I'm looking at revenue growth of 62.5% and a net profit margin of 53%. That's absolutely stellar, Brooke.
Those are indeed impressive numbers, Ethan. The high P/E ratio of 44.4 suggests the market has priced in a lot of that future growth. And we did see quite a bit of insider selling, a minus 0.62% in shares, which while small is still net selling. Even Morgan Stanley raised its price target to $250, but we also saw headlines mentioning Michael Burry taking aim at the stock, raising questions about potential overvaluation.
Sure, there are always going to be skeptics, especially with a company that's had such a meteoric rise. But those KPIs, especially that revenue growth and profit margin, really speak to the company's competitive strength. The news about new AI labs, partnerships, and continued analyst optimism all reinforce that Nvidia's leadership in AI isn't going anywhere anytime soon. We rated it a speculative gamble last time, but with this data, it's a clear upgrade.
I'll concede on this one. While I always look for risks, the fundamentals and market sentiment are too strong to ignore right now. For Nvidia, the verdict is a buy.
All right, let's talk about Instil Bio, Inc., TIL. There was a very bullish deep dive post, but a quick look at the comments reveals a different story.
A very different story, Ethan. The user sentiment is overwhelmingly bearish. We're seeing comments like worst trade of 2025 for me and oh my God, stop pumping this garbage. The historical performance is dire, with the stock near its 52-week low of 10.8, down from a high of 42.79.
Well, biotech can be incredibly volatile, and these cutting-edge therapies often have a long runway before commercial success. The original post was really optimistic about their cancer drug and anticipated explosive Q4 revenue.
Optimism needs to be grounded in financial reality. Our KPIs show deeply negative profitability, an EPS of minus 11.35 and zero net profit or operating margins. This company is clearly burning cash. Users are questioning the core technology's viability for solid tumors, citing low success rates in complex manufacturing, which directly impacts their ability to ever become profitable.
It sounds like a tough battle for them, especially with the high beta of 2.07 confirming that volatility is brutal. It was rated stay away previously, and it sounds like that hasn't changed.
Not at all. For Instil Bio, TIL, the verdict is to stay away. The financial red flags and widespread disillusionment are too strong.
Finally, let's look at Iovance Biotherapeutics, Inc., IOVA. This also had a very bullish post, but similar to TIL, the community sentiment was largely negative.
Yes, the original post made a strong case for IOVA's potential with its first-in-class cell therapy, FDA approval, and expected revenue ramp-up. There was even some insider buying, which is a positive signal, and news of narrower-than-expected losses.
Ethan, the KPIs tell a more sobering tale. We're looking at a net profit margin of minus 1.58, an EPS of minus 1.19, and a staggering debt-to-equity ratio of 7.47. The stock is down 75% from its 52-week high of 9.38 to its current price of 2.3. That's a lot of past losses for investors, and the community is definitely feeling it, calling it a turd company and expressing skepticism about the therapy's profitability and market viability. It's true that the high debt and deep unprofitability are concerning, even with the projected revenue growth. For a biotech, proving consistent profitability and scaling up production for a complex therapy is a monumental task. This one has never been on our radar before, so it's a new entry.
And one with significant risk. Despite the bullish post potential, the overwhelming financial challenges reflected in the KPIs, coupled with the strong negative sentiment and historical underperformance, make it too risky for now. For Iovance Biotherapeutics, the verdict is to stay away.
All right, that was a busy day, Brooke. Let's recap our top picks for further investigation. Investigate as buy. MongoDB Inc., MDB. Nvidia Corporation, NVDA. Investigate as cautious buy, none. Investigate as speculative gamble, Iovance Biotherapeutics Inc., IOVA.
That wraps up our analysis for today. Remember, this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses. The market is a wild place, and knowledge is your best asset.
Absolutely. Thanks for tuning in, everyone. We'll be back tomorrow with more insights and hot leads. Until then, happy hunting.